Welcome, everybody. We're excited that you are here. We host these financial workshops with Mountain America Credit Union on the third Thursday of each month. And today we have Bill. He's a financial education manager with MacU, and we'll be discussing credit myths and busting some of them and answering any questions you have around credit. But I wanted to give Bill a proper introduction. So, Bill has 8 years of experience in the financial industry with roles including loan officer, branch manager, and then financial education manager. Prior to joining Mountain America, he held various management positions in the agriculture sector. Sorry, let me repeat that. The agricultural sector. Bill is committed to providing the resources and education necessary for individuals to thrive and secure their financial future by equipping people with the knowledge and tools they need to succeed. In his free time, he enjoys working on home projects and maintaining his garden. I will turn the time over to Bill and we'll get started. If you have any questions throughout, feel free to unmute yourself. We have a small group today, or you can throw it in the chat and I can relay that to Bill.
Awesome. Well, thank you, Sadie. I usually don't get any kind of introduction, so I like this group already. Like this is awesome. Let me share this screen. Okay. Does that look good to everybody? The main screen, credit myths busted. Okay.
Yes.
Thank you for the thumbs up. Okay. So the goal for today is really I want to present for about half an hour to about 35 minutes. And the reason is because generally with this presentation, we get a lot of questions and I want to make sure that there's ample amount of time. So if there's any kind of information that you see on one of the slides that maybe I breeze through that you still have a question about, please feel free to interrupt me. That sounds bad, but stop me just right there, or feel free to ask it at the very end. This is a very heavy topic, and I know a lot of people have questions, so please have those ready. I'm more than happy to answer those. So to get started, I want you to think about uh, maybe a post that you have seen on Facebook, or maybe some information that you have received from someone specifically related to credit. And maybe further down the line, you have gotten some contradicting information, whether that was from someone else on a Facebook post, or maybe you went into your bank or your credit union to apply for a loan and you got differing information as well. Credit can be uh, very opinionated, but today what we're going to focus on is how you can really understand your credit. You're going to be able to understand what makes up a credit score, some risks that are involved with credit. If there's any kind of maintenance or restoration that needs to be made, we'll talk about that. And then your rights as a consumer. Um, and again, it's a sometimes heavily debated subject. I would consider myself an expert, and the reason I tell you that is I think that if you're given bad information, it can really damage your credit, or it can really put you in a bad position, or a non-optimal position if you're trying to get a loan, or if you need to use your credit. So let's just jump in, and we're going to talk about some basics of credit. So a credit score, what is it, and where does it come from? So there is a little bit of history, and I'm not going to jump into the full history of it, but your credit score can vary from 350 all the way, or excuse me, 300 all the way up to 850. The 850 is considered kind of like a god status. I read an article one time about a gentleman who strove for that 850 and it took him like 10 years. So I guess it is possible to hit an 850, but in order to take advantage of the best interest rates and things like that, you do not have to be at that 850. Sometimes your credit score may vary depending upon the platform that you're using. For example, your bank may have an application an app that gives you your credit score. That may differ from, let's say, Credit Karma. And the reason that those vary is because there are different reporting agencies, and there are three main ones. And then within those agencies, they actually use different models of credit scores. And so, depending upon what each bank or financial institution is looking for, or what they want to prioritize the kind of way in terms of your credit, you're going to have a different credit score. So, this next slide kind of gives a very brief example of that looks like. If you look to your far right, we have four examples up there. So Mountain America, we use Experian for the vast majority of all of our lending, and we use version 2 of Experian. And all the information is the same uh, across those four, but as you can see, the scores vary. So with Mountain America, it's a 740, but if you went to Explore Bank, they use TransUnion and they utilize version 8, which, as you can see, there's an 18-point difference. And so it can vary the credit score itself, even though the information may change. And there's not really anything that you can do about it, but it's important to be aware of why that score may change from one institution to another. I know that sometimes there can be a lot of frustration, but when you understand why there is a difference, it makes it a little bit more palatable, I suppose. Um, and so if you go from one place to another, you're going to get a different score. We have the five ranges of what a credit score can look like. So I briefly touched on exceptional, and that's anything that's greater than 800. So you can experience a very easy approval when it comes to applying for new credit. You can experience very low interest rates. Sometimes places will even give you like some kind of bonus interest rate, like they'll lower it even more because you're, for all intents and purposes, you're guaranteeing that you're going to pay this back based upon your credit score. Very good is 740 to 799, and you're still going to see probably the best interest rates. However, you may not see kind of that bonus drop in the interest. It's still going to be a fairly easy process. Shouldn't be a lot of complication when you're applying for loans. Good could be considered acceptable for any kind of lender that is trying to that is potentially going to give you money. That ranges from 670 to 639, and there's probably nothing wrong with your credit. Sometimes it can be that you're newer to credit. You may have maybe a credit card or two that has a little bit higher balances, but you don't have any late payments, no delinquencies, nothing like a bankruptcy on your credit. Fair is 580 to 669. And these are considered, or what lenders will call subprime borrowers. Getting credit may be a little more difficult, or you may see a little bit higher interest rates. And sometimes the factors that go into these credit scores, maybe it could be very high balances on credit cards. Maybe there's a late payment or two that is fairly recent, which has led to the score. And then poor is anything below 579. There can be serious delinquencies. Bankruptcy can be a factor. A lot of late payments, high credit card balances. And this is kind of where we talk about some myths of credit. So one myth that we want to dispel is that your credit score doesn't matter unless you're applying for a loan. And we'll see a little bit further on that there are going to be some circumstances where your credit may come into play when you are trying to do things outside of a loan. And we'll talk about that a little bit more. The second credit myth that we want to dispel is that your credit score is a secret, and that really no one is able to see it except for the banks when they're pulling information for that loan, and that's not true. We're gonna give you a resource where you're gonna be able to see what your credit report looks like. You're able to check it and you're able to verify it. So, kind of referring back to that previous slide of why you would maybe want to know what your credit is like, or that only you're only going to use your credit for loans. There are a lot of people that can look at your credit and that may want to. We have a few examples. Lenders, obviously, when you're applying for a loan, landlords uh, may want to pull your credit just to see your repayment history, just to determine if they're going to get rent on time. Sometimes employers, not as popular, but it is not uncommon that sometimes an employer is going to look at your credit just to say, okay, well, if they can make their payments on time, then uh, they're going to be able to make it to work on time. And I do see a question coming in, and it went away, but I saw, is it true that rent is reported to credit? Um, let me pull up the chat real quick. Is it true that making
Sorry, it
rent
was
payments?
me that asked
Oh,
the
no.
question. I've been told that rent payments don't count towards your credit score, which I think is baloney. But your landlord can look at your credit score, even though that would not be reflective of how you've paid rent in the past.
Correct. Yep. So you nailed it on the head. Rent payments generally do not. I say generally, and that's probably incorrect. Vast majority of the time, it is not reported. There are some self-reporting agencies out there where it can be added to your credit. And I actually know that there have been some conversations recently in regards to credit about potentially adding rent. But as of right now, nothing official. But yeah, landlords can still look at it, even though there is no history of how well you've paid your rent. So that's a great question. Um, Insurance companies, sometimes they'll look at that to determine what your premiums. And then you have the ability as well to look at your credit report, and you have the ability to determine if information is correct. And you have obviously the right to dispute that. A little bit later on, I'm going to give you a link to where you can go to look at your credit report. So thank you for the questions. Keep them coming in. I'm just going to continue. So we've talked about this a little bit and hit on it, but why is it important that you have strong credit? Number one, it can affect your ability to get loans. It affects the amount that you can get. It also impacts the interest rates that you're going to be able to get. Sometimes your insurance rates as well, like how much each month you're going to have to pay on your premiums. And then sometimes it can affect a deposit rate as well, both with insurance. I haven't really seen it a ton with landlords, but on occasion I have run across someone who they had their credit report pulled by a landlord and they said, "Oh, okay, you have a really good credit score. We're not going to charge you as much as of a deposit when they're initially getting their apartment or home or whatever that may look like." Are there any questions thus far that anyone wants to come off mute or type into the chat before I move on? Okay. So with some of the myths is, if you've never seen a credit report maybe from a bank when you're getting a loan, this next part can be very informational just because it's kind of like the mystic credit report, like what is on it, what do they actually see? And so I'm just going to briefly go over the components of a credit score. The first section of your credit report is really just going to contain personal information. And a lot of this is going to be verification information that they're going to want to verify if you've pulled your credit before, just to determine that you are who you really say you are. Credit theft is not uncommon. So that's just going to be your name, any variations of your name. So for example, I go by Bill, but my name is William. So I always use William on official forms. But maybe on occasion I don't know, Jess instead of Jesse, and they may ask, have you ever had any variations? And so it's important to know what information you've put on previous credit reports when they're trying to identify you and make sure that the application is for you and not for someone else. Address is going to be on there. It's usually good to have at least 2 years of addresses if you've moved. Your date of birth should not change. Your social security number as well should not change. It's not as common, but phone numbers sometimes can be on your credit report as well. Employment history is on there. Usually this is, again, a verification factor more than anything. So they'll want 2 years of your employment history. This information, though, and this is another credit myth that we want to dispel, the information that you provide on your personal identification and your employment history does not affect your credit score. The upcoming slides with the information will affect your credit score, but the information that you provide for employment and personal are not going to affect your credit score. Public records can include anything like bankruptcy, if you have a lien against the state, if you don't have a lien against the state. I actually have a good story. But if you have a lien by the government, that can be federal or state. If you owe back payment on child support, that can appear as well. So I'm not originally from Utah. I'm originally from Colorado, and I moved here about 10 years ago. And when I first moved here, I was a lowly student. I didn't have a ton of income, but the filing taxes, the amount was different between Colorado and Utah. And so in Colorado, it's lower than it is here in Utah. And so I made a little bit of money, but I didn't file any taxes. And the state of Utah put a lien against on my credit. And so sometimes the credit report can help you know about things that are potentially going on. And so I saw that there was an alert on my Credit Karma. I saw that I owed like $200 to the state of Utah, and so I was able to pay that off. But they'll get you, and they're pretty savage about it sometimes. Probably the biggest and most important area of any credit report are going to be the trade lines. And this is where a lender is going to look at the information about anything that you have currently going on with loans or anything that you had previously. The previously is not nearly weighed as important as the current trade lines that you do have, but it can be taken into consideration. So on this particular one, we can see that this is a mortgage loan. We can see the amount that is owed, total amount that is owed, the balance, top right-hand corner. We can see monthly payments. We can see its status. We can see the terms of the loan. We can see have there ever been any kind of late payments when it was opened. And so that information is going to appear for every single type of loan that you have. Just looking at the chat, and that is a great recommendation. Thank you. Are there any questions that anyone has about what can be seen on your trade lines, or any question in regards to information that is provided or taken into consideration when approving a loan in this area that anyone may have? Okay, no worries. Another credit myth that we frequently run into in this particular area is that if you make more money, you'll have a better credit score. And that is a myth. So statistically, does anybody want to come off mute or throw in the chat? Who do you think profession-wise are the professions that typically go into bankruptcy most? Any ideas, thoughts? So the profession that typically goes into bankruptcy most. Finance, that's a good guess. I have seen some pretty sketchy financial business. It's actually doctors and lawyers. Doctors and lawyers, if you're a pretty decent lawyer and a pretty decent doctor, you're going to make quite a bit of money, but they are the profession that typically goes into bankruptcy most. And so the credit score doesn't matter how much you make. You can be a student that doesn't make hardly anything, and you can have a really strong credit score. You can also be a doctor, a lawyer, whatever position, have a really strong credit score, but the amount of money that you make does not affect your credit score. There's a couple questions that I quickly want to go over because they relate to this. If you miss a payment, how long does it affect your credit for? So there are a couple factors that go into this. Number one is the length that you have of established credit period. So someone that has, let's say, a year of credit history, it's going to affect them a lot longer because out of 12 payments, you've missed one of them. And so the recovery time could take the same amount of time that you have that credit history to get it back to where it was previously. Versus someone who, let's say, has 10 or 15 years worth of credit history, having a little blip, it may drop your credit score a little bit, but it may only take a couple months to get back to where you were previously. And so credit length, or excuse me, history and how long you have credit is a very big factor. I would say if you're in that a stage where you have very established credit history, it's never happened before, I really wouldn't worry about it. Sometimes it happens, and just anticipate 2 to 3 months for it to bounce back. Next question, concerns about student loans. How do deferment or forbearance affect credit scores? So if it's deferred, it's kind of like a dormant account. It doesn't really affect you in any way, shape, or form because you're not making payments or required to make any payment. And so it's not really going to affect your score up or down. It's kind of this weird dormant account. It really is not going to affect you until you start making those payments again. I know that sometimes when it comes to credit approval, however, sometimes it can come into effect. Most institutions, if it's deferred through the government, they won't count it against your debt to income. Some will, but it's very rare. But in terms of your credit score itself, it is not going to affect your credit if it is in deferment. Great questions. Anyone else have anything they want to post or any clarification further from the questions that I did answer? Let's see. Okay, perfect. I'm gonna move on then. And this, we're still in the components of a credit score. So inquiries are next. These can be considered like hard pulls or soft pulls. Hard inquiries affect your credit. And these are generally when someone is trying to determine your credit worthiness for a loan. And if you have a large amount of hard inquiries, it can actually decrease your credit score pretty significantly. A general rule of thumb is you don't want to have any more than 10 inquiries over a 2-year period. So that's how long an inquiry will last. And it is a running timeline. So if you pulled one, let's say today, it would fall off in 2 years on April 17th of 2027. And so the less hard inquiries you have, the better you're going to be. There are also soft inquiries, and these can be for maybe that landlord that is wanting to determine your credit worthiness for an apartment or for a home, or your employer. You can always ask as well, hey, what kind of pull is this going to be? Sometimes it may not be worth a hard credit pull for you in order to get the apartment that you want or employment. Or sometimes you can ask, hey, is there any possible way that you can just do a soft inquiry? And to the question in the chat, yes, soft inquiries will show as an inquiry, but they do not affect your credit score. The hard inquiries show and do affect your credit score. So you want to have generally 10 or less over that 2-year period of hard inquiries. That's a great question. And on the flip side, I do want to add as well, don't be afraid to pull your credit in circumstances where you may, for example, refinance your home or a loan or anything like that into a lower credit, into a lower interest rate. Some people hyper fixate on that number, that credit score, and they're like, I can't afford 15 points. But if you can save yourself any amount of money through a loan, if you're able to refinance it, don't feel so obsessed with that number to where you're not willing to do any kind of hard inquiry if it's going to help you in the long So your credit score is made up generally, the vast majority, in two areas: 65%, 35 in payment history. So this is just simply how well you make your payments, pretty black and white. And 30% is the percent of debt that you carry. So this generally applies to revolving lines of credit, which equates to credit cards. So if you have quite a few credit cards and you are maxing them out or getting close to the max limit, you're going to have a lot lower credit score than you could potentially be having than if you had those paid off. This is where a lot of people have questions about this, like what factors go into the credit card payment? When should I make it? And I would say that there are two dates that are the most important. Number one, it is your actual payment date, right? Making sure that you're at bare minimum doing the minimum. And the second date is when the financial institution reports to the credit bureaus. So that can vary from institution to institution. For example, Mountain America, our credit cards are due at the end of each month, and that's when we also report to the credit bureaus. If you're able to pay down your credit cards before the financial institution reports, you can actually see a pretty significant jump in your credit score. I know that sometimes paychecks can affect that. You know, when your income is coming in, but you can, on your statement, you can actually look and see what day it's due, and then you can contact the financial institution to see what day they report as well. If you're looking to increase your credit score, that's a good way to do it. The other three factors are just length of credit history, any new credit that you have. So these are just new loans and the length of time. And then the credit type as well. So is it a mortgage? Is it a vehicle loan? Is it credit cards? Is it an installment loan, otherwise known as a personal loan? And all of these together make up your actual credit score. This is just a quick overview again of the three most important: your payment history, the debts that you owe, with emphasis on the unsecured or credit cards that you have, and then the length of credit history make up 80% of your credit score. Any questions, concerns, rumors? Okay. One credit myth associated with this is that negative information like bankruptcy or collections can stay on your record for more than 10 years, and that is not true. So the max that it can stay on your credit history is 10 years. At that point, it does have to be removed. Usually the timeline I hear frequently is 7 to 10 years, which is true. However, it is at the discrepancy of the credit bureaus as to how long it is going to stay on there. And I've seen more often than not, it's usually to the max, the 10 years, not the minimum of 7 years. Let's see. Just have a comment and question. I didn't get a credit card until I was 40. I know, and I think that hurt my credit. Is that true? So there could be a couple factors that went into that. If you get a new line of credit, then your credit history is an average of all your lines of credit and the time that they're open. So let's say you have a credit card that has been open for 20 years, and then you have another credit card that you just opened. At that point, your average length of credit, if you only have those two loans, your average length of credit is now down to 10 years. And so it is kind of silly in that, because like, oh, well, I have a credit card that's been open for 20 years and now that length of credit history is down to 10. That could be a factor as well. That's probably the biggest thing, Angie, that's coming to my mind that potentially has affected it. But it can also be maybe balances that are being carried. Also, it could be that the credit pull or the hard inquiry affected it a little bit. So those are the two biggest factors that come to mind that potentially could have affected your credit. Hopefully that answered it. So a couple considerations when it comes to your credit score and time as it specifically relates to events. So the past 2 years for delinquencies have the most amount of effect. I will say though, like just with the question that was asked, if you have established credit and you have a missed payment, it's going to be much easier to bounce back from than if you have a very short amount of time or if it is becoming more frequent. But 2 years is generally what lenders will look at to consider whether you're stable or not. And then talked about it briefly, but the negative events can stay on your credit report between 7 and 10 years. A couple recommendations to have a good credit score is budget. A lot of people, I was in branches for 7.5 years before this position, and a lot of people are making minimum payments out there. And it can definitely be due to just economic circumstances. There's a lot of volatility going on right now, but a lot of people as well, they have a credit limit and they're spending money on things that they just don't need, and they're not willing to cut the unnecessities out of life, and so they're making that minimum payment. If you don't have a budget, start one. If you don't know how to start one, please let me know. I'd be more than happy to help you. There are a lot of resources out there, but budgeting is probably the number one thing that you can do. Another thing is making your payment on or before the due date. There's no effect if you pay it before. And then making sure that your accounts are being handled over a longer period of time. So what we mean by that is don't, for example, credit cards that was mentioned, don't open and then close credit cards. Maintain them for a long amount of time, and you really don't need a ton in order to have a really good credit score. Let's see, I'm going to jump to the chat. This is from Gwen. I was told once to have a credit card that you use to pay your utilities or something small each month, then pay it off in full each month because it builds a positive payment history and increases your score. Is that true? Yes, I can absolutely agree with that. You do not have to spend oodles of money or go up to the limit on your credit cards in order to have a solid score. You really only need to have shown that you made a purchase, because the amount that is purchased is not shown. It's only the balance that you carry over from statement to statement. And as long as you're purchasing something and then paying it off, you can have a really strong credit score. So that's a great question. Thank you, Gwen. Again, if you have any other questions, please feel free to throw it in the chat. Some credit risks. Co-signing. I've seen many a parent that was undercut, so to speak, by a child. I remember when I got my first credit card, my mom co-signed and threatened under pain of death that if I ever missed a payment, I would cease to exist. You may or may not want to take that approach if you're co-signing for someone, but it affects your credit. Basically, when someone is using you as a co-signer, it's that they are not worthy. They are not worthy. I guess there's no better way, and that can be due to new to credit, bad payment history. And so when you're co-signing, it's really you that is taking the burden of the loan. So make sure that you're doing that in the best of circumstances. Unpaid items, this can include things that generally are not going to report to credit. So for example, you purchase a phone from T-Mobile, from Verizon, wherever, and they're like, oh yeah, we can get you on a plan. The plan itself may not be reported to credit, but it will be reported when you stop making payments. This can include any utilities as well, light, gas, water, anything along those lines. Thankfully, doctors and medical bills were previously being reported, and they are not now. So that is a really big bump for a lot of people. We talked about maxing out credit accounts, just being up to the limit. Again, it's when it is reported. Sometimes you'll make a big purchase and you have the ability to pay it off before the statement date comes out. Make sure that you pay it off before, otherwise it can really damage your credit. And then cash advances as well. We mostly have this on there because of the extremely high interest rates. So there's a purchase interest rate that you have, whatever that may be, 15, 20, 25, versus cash advance, which can jump all the way up into the 30s, sometimes even the 40s. And so just being aware that that is going to cost you a lot of money to do a cash advance. We've talked about some warning signs, but a few of the most important ones are if you're receiving calls from a collections agency, that may be a red flag. If you don't know where you're actually sitting, kind of with that budgeting, or if you're only able to make minimum payments, those can be pretty big warning signs. A couple things to avoid: credit repair clinics. Please don't think that we're saying don't fix your credit. What we are saying is there are clinics that are going to charge you money, like clinics, and I say that with air quotes, that are going to charge you money for things that you can do yourself. Probably the most common one is we will help dispute all the information on your credit. And so what they do is a credit repair agency, they'll call all the credit bureaus and they'll dispute everything. And what that does is it basically gives a breathing room of roughly 30 days because the credit bureaus have to go in and they have to review all those accounts that are disputed. And more often than not, they'll come back and they'll say all the information is correct. There's no longer any dispute, and everything that was previously on there is still on there. However, you're out however much money you paid to those clinic repairs. I've seen anything from $500 all the way up to $5,000. So there are a lot of free resources out there, including myself, that can help you navigate that. So please feel free to reach out for that, but avoid any place that's going to has a guarantee of, oh, we can buy your credit score into a better position. That's just not how it works. High interest debt consolidations. You can consolidate debt into lower, but you want to make sure it is lower, and that, excuse me, the consolidation is not getting you into a worse place. Rent to own. If you can't afford it now, probably shouldn't buy it now. And then payday loans. I've seen there are a lot of places out there, Cash Check, Cash City, whatever that may look like. I've seen 200, 300, 400% loans. So if you can avoid that, it's probably great. Excuse me. I don't know about all of you, but allergies have absolutely murdered me. I love spring, hate the allergies. Dollar Loan Center, they have peppy ads. Yeah, absolutely. Are there any questions as of right now that anyone may have regarding what I've talked about? I know I'm kind of plowing through this. Okay, we'll just continue then. Maintenance and restoration. Good. I'm glad you're learning. One myth, and perhaps one very disheartening thought that I've dealt with a lot of people, is that there's nothing I can do to fix my credit report. It is what it is, and I'm going to be stuck with it forever. And that's just not true. There are several things that you can do. First off, you can review your credit report, and if there is something that needs to be disputed on there, please dispute it. The credit bureaus do have a dispute process, and if there's something that's incorrect that's negatively affecting your credit, talk with them. Here's the website that I referred to earlier, annualcreditreport.com. You have the right to review every single year your credit report, and that's for all three bureaus, and you have the ability to look at what's on there, what's being reported, and it's going to be at no charge to you. And there's another slide that has this, but it's just annualcreditreport.com. For a restoration, if you've had some kind of late payment, maybe all you need to do is create some kind of automated payment, at least to where your minimum payment will be covered if you forget. I can't tell you how many people I've run into at the branch that come in beyond a day or two late the grace period, and they make a payment and they had the money in their account. There's no way legally that a financial institution can reverse that, because it's called fair lending. If someone comes in 2 days late outside of a grace period and they do not report it legally, then they're not lending fairly to everyone else. So be aware of what that can cost you if you're late, even if you have money in the account. You can also pay off your debt. and specifically your credit cards. So if you have high balances, paying that down, and just sometimes you have to wait a little bit and make consistent payments in order to restore. You can contact creditors. I know that if you're in a difficult financial circumstance, you can actually reach out to the financial institution and say, I'm kind of going through a hardship right now, or I need some help. A lot of places would prefer that they get you on some kind of plan, some temporary plan, versus not paying them. I mean, that's the reality of the situation. Is if you can get back into a situation to paying them back, they would prefer that much more than you defaulting on the loans that you have with them. We do have a few slides, and I know that we're coming up on time, but a couple things that I want to point out. If a loan is denied, you have the right to, excuse me, you have the right to know why you were denied. In some circumstances, you may be able to look at the credit report as well. But if someone says, oh, you're denied, make sure that there's a reason that is given why. Here's some things that collectors cannot do. Can't threaten you with violence. They can't throw you into jail. And if you owe money, or excuse me, if someone else owes money and they're trying to collect it from you, they cannot. I see that most commonly with parents, for example, where they have a child that has the same name. Don't pay. If there's some kind of issue, you can talk to them, say, hey, this is not me. Some other general information is collectors cannot, excuse me, call you before 8 a.m. or after 9. That's a huge window, I know. But some other things is they can't contact you more than 7 times in a week, or if they've spoken to you, you've actually picked up the phone, they can't talk with you again for another 7 days. And then if there's some location where you do not want to be contacted, church, work, social activity, whatever that may be like, you can tell them and they have to honor that. A few resources for you. The bottom left is if you're getting a lot of calls from solicitors. I'll leave this up there just for a quick second if anyone wants to take a picture or anything like that.
Do you happen to have a handout for rights and resources?
The ftc.gov is actually going to be a good resource. I don't have any actual physical form myself that I can send you, but that ftc.gov is going to be a very good resource where you can see all that information.
Awesome, thank you.
Yeah, that's the Federal Trade Commission. You can also go on the websites of Experian or TransUnion or Equifax, and you can see additional information as well. Your call to action. So, just want to end with this call to action. Then I'll jump to another slide. If you want to improve your credit score, reduce that credit ratio. And so what that means is the amount of credit card debt that you have versus your limit, pay it down. You can see a huge jump when you pay it down. You can even experiment. I have a lot of people that ask me, does it really matter if I carry a balance versus not? Carry about a small balance of, let's say, $100 and then pay it off. And if you have something like Credit Karma, you'll see it go up a point or two. And it can continue to increase with larger amounts as well. Make sure that you're reviewing your credit. I think this is really important to know where you stand if you needed to go to a lender, but also to protect your identity and to protect the identity of your credit report itself. It's probably one of the most difficult things to correct is credit fraud. So make sure that you're up to date and that no one is reporting information or taking out loans under your name. You can look at your credit score, whether that's through, if you bank with Mountain America, it can be through that, or whoever your financial institution is. I would say almost everyone out there has some kind of app that shows what kind of credit score you have, or at very minimum, you can download Credit Karma. I think that it's a good substitute if you don't have anybody. If you have questions about your credit, speak with someone about it. There are still this is the surface of credit reporting. So if you have questions, reach out to someone that can help you. The next slides I'm going to keep up for a couple seconds. If you want to talk with someone on my team, this is the QR code, and I'm going to leave that up. Okay, and then very lastly, if you want to speak with me directly, this is my specific code. This will send you to my Once Hub. Are there any questions that anybody has? I think we're right at time, but still want to open that up. Is there anybody has any concerns?
And while you're thinking, I just wanted to highlight that you can receive wellness points for financial wellness coaching, whether that's through MACU or our Utah retirement systems, or if you have somebody else that you like to visit, we definitely give those wellness points out. You would just upload verification into your Wealth Steps. But Mountain America has been fabulous. They can get you in pretty quickly as well.
Well, Sadie, I appreciate you having me. Hopefully, I lived up to Holly and Scott's level.
Absolutely. We were excited to have you. That was wonderful. And it looks like you answered all the questions that folks had because nothing's coming through.
Great. Well, if there's any additional, please don't hesitate to reach out to me and schedule a coaching. So thank you for having me.